Do not sell your shares. Do not sell your shares. That's right, I said it. Do not panic sell your SoFi shares. Welcome back to the channel, everyone. My name is Jason, and in today's video, I'm going to break down why I think it's a horrible idea for you to sell your SoFi shares. I know it's not been easy being a SoFi investor over the last several months, from 30 bucks down to around 20 right now. But I think this is a great buying opportunity for the long term. And I think it might be an actual healthy thing that the stock sold off a little bit. But there's a lot more to it. I'm going to go over it in today's video. So make sure you hit that like button, subscribe to the channel. Let's get into the video. All right, all my SoFi investors, let's dive into the tape and check out why I think it's a terrible idea to sell your SoFi shares right now. SoFi getting obliterated over the last 3 months, guys. Down nearly 30%. It's been a shit show. Year to date so far, not much better, down 20%. But over the last year, we're still up over 40%. We topped out back in November, 32 bucks a share. We did get under 20 bucks where I added some shares. Just to be transparent, I do own around 6,000 SoFi shares right now. In this little baby account, I own about 400, and in my big dog account, that's where I own the rest of my SoFi shares. I also have some sprinkled in some IRAs here and there as well, guys. But let's kind of dive into why I'm thinking this is a great buying opportunity for SoFi. And don't fall into the noise. Don't panic sell, especially the stock down 20, 30, 40%. I don't want to sell then. The earnings report was amazing, guys. Go on to SoFi.com, check out the earnings report. We'll get into it briefly in this video, but I want to show you guys some trends. First, let's start out on Robinhood. Look at all this selling. This is retail selling. Look, net sell, net sell, net sell. And that's been since right around when earnings were released, man. Big, huge red selling by retail, right? But then, here's where it gets interesting and why I put out that video. I'll leave a link for that in the description down below. Wall Street's stealing your shares. They're shaking you out, and they're getting a better deal on the shares. Remember, they did that public offering not too long ago, and that was in that, what, $27 range, right? So they're all underwater. You think these guys want to be underwater? No. That's why, if we take a look at the hedge funds, look, in Q2 2025, 100% buy, 0 sell for hedge funds, 2.5 million shares. And then here, Q3 2025, 99% buy, 770,000 shares, right? So that makes me think, what are they seeing that retail is not selling? And I think a lot of this depressed stock price, in my opinion, is coming from retail selling their shares, abandoning ship because it didn't go to $50 after an incredible earnings report. They crushed it. What an amazing earnings report that was. And look, this number is closing in on 700 million shares owned by institutions. That's a huge number, closing in on 55% institutional ownership. That is a crazy number, guys. All right, guys, I'm going to pull up this chart right now. This is institutional ownership. This line behind the bars is the stock price, and we're down here at $21. But look, institutional ownership is closing in on 700 million shares owned, right? So look, up and to the right, up and to the right. We don't follow what retail is doing. We follow what these institutional owners, the buy, hold for long-term buyers are doing. Look, you see the divergence here of this stock price going down to $21, and we consistently see institutional ownership going up and going up and going up. It's actually ticked up higher. They haven't quite graphed the other institutions that are buying the stock right now, right? Because it's closing in on 700 million shares. We pull up that graph again. This only is till like December of 2025. So this is going to continue to tick up all the way, closing in on 700 million shares owned by institutions, right? So I don't want to get shaken out of my shares where institutions come in and start buying. This was at 640 million not too long ago, right? And now we're at closing in on 700 million. And if you go down here on Fintel, green is new institutions buying, red is them selling out completely. And if we take a look at percent value of the increases, we could see the increases and decreases of companies and institutions that already own the stock. We see a 288% increase there, 30% increase there. Lots of green here, guys. That looks good to me. Norges Bank just added 12 million new shares, just opening up a new position today, right? So institutional ownership just keeps bumping up and bumping up. They're taking advantage of these opportunities. Look at all this green here. Green, 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 green. That's companies stepping in at this depressed level and being like, yo, this is a serious buying opportunity, man. And we got to take advantage of that, guys, in my opinion. So don't fall into the trap what retail is doing and getting scared and shaken out. Know what you own. And I'm going to show you guys some of the numbers in a little bit. But here we go. Key points. Citizens JMP upgrades SoFi technology to outperform from market perform with a $30 price target. This just came out yesterday, right? Going from 21 up to 30 is a big increase in value in 1 year, right? I'll take 40% on my money year in and year out. And if we take a look at $32 all the way down to the peak, the trough, down nearly 40%, guys. If you go into the Nike store and your favorite shoes are 40% off that you absolutely love, you know it's high quality, you know it's going to be comfortable on your little feeties, you're going to buy it at a 40% discount, are you not? So I look at that the same way as I look at stocks. The PE ratio is at 55 right now, but that doesn't tell the entire story, right? We're going to go over to the metrics. The market cap right now is at 26 billion. It was up to 33 billion not too long ago. So we're getting a considerable discount. And what we really want to look at is the forward PE. It's the lowest it's been in quite some time, back in March of 2025, and the business has only grown since that point, right? Back in December of 2024, the forward PE was closing in on 80, guys. So that's almost a 50% discount on a PE ratio looking forward, right? The PEG ratio closing in on 1, and that's where you want to buy, right around 1, under 2. It hasn't been under 2 in forever, guys. So the PEG ratio looks really juicy to me here at 1.64. Price to sales, a little bit high for sure, and price to book, you want to look under 2 as well, guys. So again, it was at 4.64 price to book. Now you're getting it at 2.57. Looks like a considerable deal to me, everybody. All these metrics are looking good for SoFi, in my opinion. And they raised all that capital, so where are they going to put that money? I'm really excited to find out where that goes, right? They got around $5 billion in cash. I love that. Only $1.92 billion in debt. So if they want to, they could pay off all their debt and still have over $2 billion in cash. That's the kind of company that I want to invest in, guys. A great cash to debt ratio, and we continue to see this short interest fall. It's now under 10%. Remember, not too long ago, it was approaching 20%, right? So shorts are even bailing out of the stock, knowing that, these fundamentals are so good in this company that I could get myself in quite the pickle if I keep trying to short this stock, especially at 20 bucks. Shorting at $30 makes a little more sense, but at $20, I think that's a serious risk for companies that want to short the stock. But I can't tell you guys enough how good the earnings report is. Let's go over that just briefly before we wrap up this video. All right, real quick, guys, I just want to go over some of the highlights from the last earnings call. Record adjusted net revenue of $1 billion, up 37%. I can't reiterate how crazy it is that this company keeps growing at these insane rates quarter after quarter, year after year, for years now, years on end. It's remarkable, guys. It really is. Record adjusted EBITDA of $318 million, 31% adjusted EBITDA margin. Another killer highlight from this earnings report. GAAP net income of $174 million, 17% GAAP net income margin, 9 straight quarter of profitability, closing in on 10 straight quarters of profitability, man. They added a record 1 million new members and 1.6 million new products. They drove brand awareness, to an all-time high. Unaided brand awareness reached a record 9.6%, reflecting SoFi's strength as a trusted brand name. They further expanded their loan platform business. LPB originations increased to a record $3.7 billion, guys. Up nearly $300 million just from a quarter ago. I'm so excited about this company. I think in the next 5 years, this potentially could be a $100 stock, everyone. Faux show. I'm super excited. The fee-based revenue, $443 million. It's up 53% year over year. Now it's 44% of adjusted net revenue. Soon, that fee-based revenue is going to be over 50% of all the net revenue. It's remarkable what's happening here at SoFi. Record loan originations, $10.5 billion this quarter. Personal loan net charge-offs of 2.8% is down 57 basis points from a year ago. Total deposits grew to nearly $5 billion quarter over quarter, to nearly $38 billion in total net deposits. And then, as a bank, book value, extremely important, right? Tangible book value growth of $1.7 billion quarter over quarter, $8.9 billion, including the benefit of new capital raised. Whew, man, I'm out of breath talking about all the highlights from this previous quarter, and to sell off the way it did, give me the shares, guys. I'm adding 5, 10, 15 shares every single day. As long as it's under $25 per share, that's my kind of threshold where I'm buying. Over 25, I'm going to hold, wait, and see what's going on with some macro stuff, with the tariffs and this administration. It's a little rocky road right now when it comes to the international community, right? So we got to just pump the brakes a little bit, dollar cost average, and just keep accumulating. That's what I'm doing. Anything under 25 bucks, under $22 seems like it's going to be a steal long term when this stock is in the 40s and 50s, right? So guys, don't let Wall Street take your shares. That's what they're doing right now. The proof is in the pudding, right? We see the stock price decline and institutional ownership continues to go up. So what are they doing? They're buying the shares that retail sold on the open market under the recent capital raise. It makes no sense to sell your shares if you know what you own. And the strong returns, this growth, it's a company I want to be a part of. That's why I'm continuing to add, and I just wanted to bring that information to you guys. If you like these types of videos, please consider subscribing to the channel. Thank you so much. Peace.